Hi, I'm Dan. Welcome to the Pay Down Debt Solutions channel. Today we're going to go over a specific instance when you use a credit card for your debt destroyer. That's the debt tool you use to pay down your debt faster. In this instance, we're going to look at they've got total income of $2,000, total expenses $2,000. They've got non-chargeables in a total of $800 and chargeables totaling $1,200. So zero cash flow left over each month. And of this $800 non-chargeable, they've got a $100 credit card payment in there. So first, let's look how traditional banking works. This will be very familiar to everybody, of course. So we're just going to look at for the month. When I get into the calendar here, we'll break it down by week. So you get $2,000, goes into your bank. Right? So you're showing that $2,000 balance. Then it goes out to pay all your bills. Right? And in those bills, you'll have all of the payments you got, whatever it is, more call them paper bills. And then, of course, we've got that credit card payment. Nice chip card. We've got the credit card. So this is normally how it goes. $2,000 comes in. As your bills come due, you just pay each one. The money just sits in your checking account. Right? So how's Velocity Banking different? So we got is these bills are your non-chargeable expenses. Right? And down here, our example, they've got the one credit card. Down here is the credit card to pay these bills. And these are your chargeable expenses. So now that $2,000 comes in, that $2,000 is in the account. We got $700 going to bills, right? Because those bills no longer include that credit card like I showed previously in the diagram, right? And we know chargeable expenses are $1,200. So that's where that $1,200 goes. Right, and the math doesn't math. No more credit card payment in the bills. Took that out, so that's $700. So we know those non-chargeables are $700. Well, hey, chargeable expenses are $1,200. Those are what's going to go on the credit card, but that's not mathing. I know I don't have any money left over every month. Well, I had to show you the wrong way to make the right way clear. So this is where adding back the income comes. This is also where calculating your available income comes from. Your available income, I'm running out of room, but your available income equals your total income minus your chargeable expenses. So in this case, that would be non-chargeables, right? Zero cash flow. But once you pick your debt destroyer, in this case, that $100 a month payment, that credit card, you got to add that back into your available income. So you withhold your cash for non-chargeable bills that are coming due before your next paycheck. Then your available income goes. Well, it's your available income, add it back in. So in order to make that right, there. So now $1,300 is going to be going to the credit card every month to cover your chargeable expenses, which we know are only $1,200. Now, when you first look at it, it's like, well, you're just putting more money on there and making the $100 payment. Yeah, you are making that $100 payment. You're satisfying, there's another phrase you hear a lot of us do that teach Velocity Banking, you're satisfying the payment. The difference is in the previous example, that $2,000 sat in your checking account, making the bank money. When you can't do the whole $2,000, because you got to withhold cash for your non-chargeables, but you take that $1,300 sits on your credit card, saving you the interest. So traditional sits in the checking account, makes the bank money. Velocity Banking, you're putting all your available income on your credit card. As it sits on your credit card, keeps your average daily balance low, which is used to calculate how much interest you pay each month. So it drives it down. The principal of that $100 pays, the $100 pays down the principal of this. It's sitting there, lowers the interest every month. So what it does is every dollar of interest it saves you is flipped and it becomes another dollar of principal being paid down. That's the acceleration of Velocity Banking. So now let's look. You've organized your debt. You organized your income. You know you got money going in, money going out every month. You calculated your available income, total income minus non-chargeable expenses. If it's equal to or greater than your chargeable expenses here, Velocity Banking works for you. Easy peasy. Keep watching or go, nope, I've got more to do. I've either got another hustle or I got to cut some expenses. I'm not here to lecture you guys. I'm here to help you guys. So what we have here is a 30-day month. I took the weekends out to make it easier to visually break up. This first is on a Monday. This first is on a Wednesday. I'm going to do weekly paychecks, but the same principle applies whether it's bi-weekly or monthly. Monthly is the easiest because it's one lump in and they trickle out. Let's just say the charges trickle in as you live your life for the month. But when you budget, this is your initial budget. You got to break it down by week. But first, before we do the breakdown, let's show you. So what do we got? Every Friday, right? $2,000 a month, $500 coming in. We're going to show them all. I don't want to leave any mystery out. I want to make sure I'm as clear as possible for everybody. I've added this on in little bits and pieces. I've even shown some students in coaching calls. I want to be as clear and concise as I can. So here we are. Fridays, $500 paychecks are coming in. They know their monthly budget, their overall, how much total comes in and out each month. They know velocity of banking will work. They've got their budget down. Everyone knows when they get paid. Everyone knows how much they get paid. Obviously, some people have varying hours. Jen's done other videos like that, variable income. It's extremely hard to do variable income. I can make another video about that another day, but this is using a credit card for your debt destroyer. So here's the 500 in. Now you got to break your budget down by week. Now this is one of the reasons we say it's easier to live it than it is to learn it. Because in order to teach, I got to put everything on the board. I got to show you guys, when you're living this, you've already been living this. You already know, hey, paycheck's coming this Friday, next Friday, 2 Fridays from now, next month Friday, whatever. Paycheck comes in, I've got to hold on to this much money. This much money goes to this bill, this much goes to this bill. I can't just spend it until I got to make it to my next paycheck. I got to make it to my next paycheck, living paycheck to paycheck. We're doing it too. So you got to plan for that. You're already doing it. Laying it out gets complex, but stay with me. So we have the 500 in and out. You guys will have already been budgeting by week to make sure you make it to paycheck, especially if you got a big bill due, like rent. So let's look it down. So I'm not breaking it down by day. I'm going to, each week, the week's bills for that week, I'm going to put on Monday for each week. But that doesn't mean they're due on Monday. So here we got 450 in chargeables, 700 non-chargeables. This week, just got 50 chargeables. This week, it's an ugly arrow, 600 chargeables. Okay, this week, we got 100 chargeable expense. Now here's the next month. What I said, let's consider this, the 700 left after that credit card payment. We're going to consider that the rent. It's a big lump sum, makes sense. One of our biggest, almost everyone's biggest payment each month. All right, so that's a 700 non-chargeable. And for the week, what do I got? Sorry, my vision. 50. There we go. So here you go. 500 coming in every Friday. We broke down chargeable and non-chargeable expenses by week to budget out. And this is, because sometimes you make your budget, you gotta work your way backwards to make your budget. Living your budget, of course, you're always looking forward. You're always preparing for what's coming. This helps you plan it. So we're gonna start backwards. So each Friday, where's the money gonna go? Now we already know, we got the bank, right? Forgive my artistry or lack of artistry, right? I just want to make sure you guys, it's clear enough. You guys can all follow what I'm doing. Bear with me. Right. So we got our calendar, we got the bank, we got our checking account. So look, here we got only a $500 paycheck, $600 chargeable. So that's a little something you got to be careful with. You'll pay attention to that in the next step. But step one, that $700 non-chargeable. That we got a budget for. That requires $700 of cash. We're only taking home $500 cash each Friday. So we work our way backwards, essentially. So here on this day, I need $700. And it's got to come from my checking account, right? Well, here, this Friday, 500 goes in. Not enough, which means, hey, back to, from here, $200 from this check. All 500 hits the checking account, right? Because this is just a calendar. This isn't anything. That's just a dry erase board representation. The full 500 goes in the checking. 200's got to be saved. The next paycheck, that whole paycheck combined to cover that big non-chargeable, in this case, rent. That's where you work backwards. That's the only time just when you're setting up, because obviously you have to look forward to each check, in which you will. You'll know, hey, I paid the rent over here. My weeks, oh, hey, I'm 2 weeks out. Once again, this is complex. You guys are already doing this. You're already living your lives. You're already budgeting. You're already paying attention to where the money goes to make sure you have it. When you got a bill due, keep the water on, keep the lights on, keep the heat on. We all do it. I don't want you guys to get overwhelmed by all the crazy stuff I draw on this board. You're already living this. This is just a diagram representing it, how you organize it, which you're already doing in your heads, which I love. So the rest of the time, right? Each paycheck's got to make it to the account. And just draw it on the calendar. Sorry about that. Little smudge. Right? So we have 500 going in. But we also have a credit card debt destroyer. So here's the way the rest of the money. Some of you are eyeballing this going, I get it. I'm already seeing what he's doing. And honestly, I love it. Tell me in the comments, say, hey, I had it by the time you drew the banks, I had it. Hey, I watched it to the end, but now I've got it. It's about helping you guys, not about impressing, I don't know, the greater world, just tuning in just to see what this is about. Okay. I'm going to take that 500 out because I just wanted to show you it had to be sitting there in order to combine to pay the rent. So now you see, we got our bank account. We got that, our debt destroyer, the credit card in this case, to pay those expenses. So how the money move? Well, here we know 500, but 200's got to go there. So here it's 300. Here, the whole five, well, yeah, we had to combine the 200 with that 500 check to get that 700. So we got zero. Zero going on that the debt destroyer that day. And then you come back. This is a chargeable expense. We don't have to worry about that because we got paychecks before it. Also, this is just a representation. This, for you, it could be when your bills due. It could be when your bills come in, because you're going to get your bill one day. It's not due for another day. So if you got some, this big chunk here and you're like, well, it's all due here, that doesn't mean you can't pay it a few days in advance to fit in your budget, to streamline your flow of money in and out of your accounts. Like I said, you guys are already doing that. Otherwise, you wouldn't be covering your bills. You wouldn't be able to pay your bills. And if you're not paying your bills, at this point, there's nothing we can do to help you. We got to get you at least close to break even. If you guys email us, we'll send you our worksheets. It's basically a velocity banking budget calculator. It'll split everything up, chargeables, non-chargeables. You can see for yourself in another video explain to you how to see with a negative cash flow if velocity banking will still work. I can only say for certainty that if your available income is equal to or greater than your chargeable expenses at this first step, it will work for you. Okay, what goes here? Here, the full 500. Full 500, again here, the full 500. You can see, 500, got chargeables, 500. So you already paid the balance down 1,000. Take 50 off, so it's paid down 950, then the 600. So this is flowing nicely, just like you guys were already doing. You just added the step of your credit card being a debt destroyer without them leaving the money sitting in the bank account. So now, I said a couple, it's actually a few key concepts. The next most important part, we covered available income, what we mean by satisfying the payment, adding it to the available income, the credit card. Now we covered budget, timing. Timing is very important. Insofar as when you start your plan and when you pay off another credit card or a loan or whatever, a chunk payment on something else, it's very important. And it's important, I call it lockup to avoid lockup. And it's not crazy hard. There's simple ways to avoid it. I'll give you, call it the long-winded explanation, but I'll also tell you the easy way to do it. So what you got to avoid is, say Say here, you took that whole 500 and put it on your card. That's great. But now you're not going to have enough money to pay that bill. You've essentially created a situation where you don't have enough money in your checking account to pay the next bill, and you don't have enough money available on your credit card to pay the next bill. Now, I just mixed a non-chargeable between the two, but if the credit card doesn't have enough room on it, there's no chance of a cash advance or, like paying, say, PayPal and having them send a check, especially if it's for rent or, a website like Plastique with a Q at the end. So you got a budget. You're already doing it. Just budget. It's not carefully. It's not the end of the world. There's other ways, but in this stage, be conservative. If you have varying hours, pick your low average. And now you could pick the absolute lowest you ever get paid. But if that amount isn't what your overall average is, go with your overall average. But mentally, no. Say, hey, instead of taking this down like back to zero, and not necessarily zero, but say your minimum account balance to avoid a fee, instead of taking it down to the minimum, I know you're at zero cash flow. Once you start getting on this, just slowly work up the minimum balance you're keeping in your checking account as a buffer just in case. That's the easiest way. Otherwise, plan it, stick to your plan, stick to your budget, right? None of us can stay out of debt or get out of debt without sticking to our budget. Enough said, I'm not here to lecture. So we see all our paychecks coming in. We see it broke down the monthly budget into weekly, chargeables, non-chargeables. How we work backwards from a payment, a non-chargeable bigger than a single paycheck, so we had to plan ahead for it. The rest is you just living your life. But now the timing. So I don't need that for the timing. To avoid the lockup I talked about. So you organized your income, you organized your debts, you identified your debt destroyer, you chose your debt destroyer. The first step to begin is put a paycheck on your credit card, right? They kind of coincide, but you set up your bills to be paid by your credit card, whether they do it automatically or like me, my electric and gas, I have to log in. Credit card's on file, I just click, yep, confirm the amount, pay the bill. However you have to do it. You do have to time it because if you chose this one, hey, I'm starting. You've got nothing in your checking account, you put $500 on your credit card. How are you going to afford your $600 in chargeables that you expect that week? You can't. So this isn't a good week to do it. So when is a good week to do it? I'll put them up first and show you. Here, and I'm going to write it between 2 days. Oh, I picked the worst, the driest dry erase marker I had. So the reason I'm writing it right before, I almost screwed up and put it right where I just said you can't, because I'm looking down and up too fast. So these are the days, and I'm sorry, it's between Thursday and Friday, because the idea is do it after you charge your bills for expenses for the week, before your paycheck. It can't literally be before. I had paycheck used to come in at 2 a.m. from one employer on Friday morning. It's not that specific. It's more of the concept. Obviously, you might make charges that Friday, but that estimate, include them in this total so you know what weeks to start. So you're trying to do it after all your chargeable expenses paid that week on your card. Then your paycheck comes in, lowers you, prepares you for the next week. So we cannot do it here because we have more chargeables than that first paycheck coming in. Here we can do it because 500 comes in, right? 300 is going to the card. Next week, there's only 100. It's less than the amount we're putting on our card that previous week's paycheck. Same here. We can do it here. Zero's going in, but we had 300 here, 150. And then this Friday, as you see that week, 450. I'll put a trick in there for you guys. This is at 400. This is 450 this week. I was wondering if anyone saw it because the month repeats. But this is another one. This is the Monday. This is the 1st. I put them on the 1st here with the idea you have bills naturally coming due on the 1st. So these can be paid after the 1st, which in this week is a Wednesday. Sorry, this one is still a good one because that 300 you put on there, there's 100, there's 150 coming out. You get paid on that Friday, boom, you're back to start, and that's where we are over here. Why is this one a day you can begin implementing your strategy Because 500 goes on your card, the next week's only 50. And then 500. That I'll say it again and again because I don't want people to see all this and go, yep, nope, way too complex. Everyone is already doing this in their head. They did it organically. They got an apartment. They knew the rent was due. They got a job. Their checks came in. They got the first electric bill. They got the first gas bill. Most places cover water, as I remember. Whatever, whether you paid it or not. But your Netflix came in. They all came in organically, and step by step, you guys adjusted and budgeted for it all. No different. The only difference is you've just got to manage the cash you keep on hand. Oop, not there. The cash you keep on hand for those non-chargeable expenses. And in this case, it was I made it very simple, so it was easier to explain. And oh gosh, could you guys imagine if I actually showed yours or my budget for that matter? Just how many things would be coming out? Oh my goodness. So here you see the importance of timing. And there's some, like I said, there's flexibility because payday, the date, statement date and statement due are not the same, so you can massage it all. But start by managing your cash first, your non-chargeable expenses for your budget. Once you're rolling, you're just rolling your credit card, stick to your budget. Your credit card's covering everything because you set it up right. You just got to be careful where you implement your strategy so you don't get locked up. You don't have, zero available balance in your credit card and nothing in your checking account with any type of bill due. Obviously, you're more worried about the card for your chargeable, more worried about your account for your non-chargeable. Clear as mud, right? I'm just kidding. If there's any step, any breakdown here, please message me. I want you guys to understand this in and out. This is the core. This is the core of velocity banking. Understanding the terminology, of course, like learning anything new, but this is the core of the budget and the timing are the key concepts of velocity banking that most people glaze over because they go, look, we'll just break down your monthly budget. Look, it all works. Look at your numbers. You're going to save money. And you will save money. That's proof you'll save money, but you need to know how to actually move your money. When to start doing the strategy, when to do another payoff, same concept. Your credit card balance is dropping. So you got an $8,000 card with a $4,000 balance. You got $4,000 available balance on that debt destroyer credit card. You got another card with $3,000. You get yourself a balance transfer or convenience check by calling and asking. They'll mail you a check. You make it out to yourself, deposit in your checking account, then pay your bill. But as soon as you deposit it is when it shows on your credit card, not when you pay that bill. So you got to be careful. You're going to want to pick that week. We're here. I just put 500 on it. Well, I use big numbers in my theoretical, but in the example, you got 500 coming in. So if you're going to make this happen here, you want to get that deposit in this week before, so your $500 paycheck drops you back down. So just like the beginning, the next card to pay off, the next debt to move over, you've got enough room on your credit card to make those chargeable expenses. You're always starting by managing your cash on hand for your non-chargeables. I hope it's clear. I hope I didn't muddy it up trying to explain it 3 different ways. The diagram will speak for itself. I'm going to step off for a second. I want you guys to look at it. I'll just go real fast because you guys can always fast forward from the beginning. At the top, we have the $500 paychecks coming in. We broke down the monthly budget into the amount of chargeables, non-chargeables coming out every week. Then we looked at non-chargeables that were greater than any single paycheck. We budgeted for that. So we saved money in our checking account to make sure we can pay that. And then we make sure the money moves from our checking account to our credit card debt destroyer as soon as it's available. Then you just time when you're going to start. This is your plan. Time when you implement or when you pay off your next debt or credit card. Same difference. All right. It's all right there. Any questions? Email us at info@PaydownDebtSolutions. Comment on this video. I'm Dan with Paydown Debt Solutions. Always aligned, never alone. Thank you very much.